Today is Monday, February the 24th, and look at all the red. We're going to go in and look at this in detail and see if there was any signs of life. But look at the volume. The volume was really high, and if you're looking for a pullback that you can buy into, you would only do that if the volume is high. If the volume is low, it means there's no commitment to the pullback. But we've never seen, since I've been making these videos, a volume on the Dow 1.6 or 60% higher than relative average volume. The NASDAQ was close to 50% over relative volume, as was the S&P 500. But the thing we're looking for is the decliners and the advancers were roughly 8-to-1. However, in the NYSE, they were much more than that. They were roughly 14-to-1. Let's go back to FinViz and let's just take a look at this chart here. Let's click on that, and we can take a look and see where any signs of life occurred. Gilead was up 5.6%. There's some thought that they might have an antiviral already FDA approved that could be used off-label for the coronavirus. You've got Regeneron, probably in the same space. But other than that, the only positives were AT&T, which of course even improved its dividend yield, as did Verizon today on the pullback. Newmont, which is a gold company. Other than that, not really a lot to see. So let's go into the stock market breadth and look at that. We went from the bearish trend rather, where we saw the bears in charge. Well, they really took charge. So you might think to yourself, oh my God, it's the coronavirus. What we've been saying all along is that the market was looking for a reason to pull back. And I'm going to show you what that looks like on the chart, because we've been talking about it for 2 months now. It found its reason, the coronavirus. If it hadn't found that, it would have found something else. Let's look at the S&P. This is what we've been looking at for, well, let's look. The last time we touched the cloud was back in August. We breached the cloud in September, and then we came back and we tested the cloud again in October. So since then we've been monitoring the cloud, and we've seen that the pricing was 200 above the cloud, 162, 218. Then we had this pullback. So we've been predicting that price would come back to the cloud. That's exactly what it did, which is a 14.6% pullback. That's not a major Fibonacci, it's a minor Fibonacci, so I don't put a lot of faith in it, but I put more faith into the cloud. I tweeted this morning where we saw an exact tip of the cloud and there were buyers there. Those buyers gave way to sellers, and we pushed a little bit more into the cloud. But let's look at the Chiku span. The Chiku span now is below the candles. The only way the Chiku span is going to find support is on the 50 EMA. And the 50 EMA, if you look at this, is a little bit lower in the cloud tomorrow for price. But I believe if we have a pullback tomorrow, that the Chiku span is going to find support at 3174, meaning the S&P will find support at 3174. What we're looking at in the SMI is the slow moving SMI is starting to move down finally. When was the last time we saw the slow moving SMI move down? It's been flat since October the 30th. In that period of time, the fast moving SMI has played around and actually in February hit an oversold position, and then they both came up to the overbought. So now we've got the SMI coming into an oversold, towards an oversold position. So will we see the slow-moving SMI actually move all the way down to oversold? Well, that would require a move similar to what we saw in August of 2019. So I'm not sure, and I wouldn't put my money on the fact that we're going to go all the way down there unless there are coronavirus cases in the United States. There's been lots of talk about coronavirus cases in Italy, and somebody posted a picture on Twitter today showing that he flew over the New Jersey container terminal and there were no containers there. Whether that's true or not, I don't know, but that would mean that goods going to and from Europe are at a low. I'd be more concerned with seeing what the containers look like on the West Coast in San Francisco and Los Angeles and Long Beach with what the containers look like coming from China. But we need to be looking at the cloud. We've been focused on the cloud, looking for a touch on the cloud, which we had. Now we either get, and we should get a bounce tomorrow because we are terribly oversold. And any time we've hit this level on the McClellan, we have always bounced. Always. Look at here, look at here, look at here, look at here, here, and here. We never spend 2 days in a row, and we don't go below, well, we've gone below this level, but only a tiny bit. So I am calling tomorrow for a bounce. Today, if you had short calls, as I did in Apple and Caterpillar, I took the profit on those short calls to about the tune of $3,000, waited for Apple and Caterpillar to crawl a little bit further up, and then sold other calls further out in April to give me more protection if there is more downside. But it was nice to reap that little 3,000 or something in profit. But look at so let's go back to the S&P. Now let's look at Apple. Apple finished at 300, right exactly at the top of the cloud. That is a significant point. Although we failed the 50 SMA, or that's the EMA, we came back below the cloud, but we pushed back and we found support at the top of the cloud on extremely high volume, but that's very important. So take a look at that, which again leads to more possibility for a bounce back tomorrow. Caterpillar finished at the bottom end of its range, out of the bear flag that we saw. So we're seeing what a bear flag would predict. A bear flag would predict that we would fall out of this flag and lower, which we did. We could be going back to this trend line. All that means is that you continue to sell calls on your Caterpillar stock. I mean, did I say to get out of Caterpillar when we were at 148? I didn't. I said sell calls. Sell deep in the money calls, and it worked. Now I'm continuing to sell calls, but now the calls that I've sold are 140s, which means April 140s, which means that I'm positive on Caterpillar for the long-term outlook. Splunk, which is our cybersecurity pick, dropped, but look at the pull-up over the 50 EMA. That's a good sign. Facebook, we don't normally look at Facebook, but we saw it fall right through the cloud, and the Chiku span fall below the 50 EMA and the 50 SMA. Facebook is not a stock that I would be buying. I don't have Facebook. If I had Facebook, I would sell calls against it and at least profit on the way back to the 200 SMA, EMA, which are roughly in the same place. AT&T was down a fractional amount, but look at where it is in relation to the cloud. Came back below the cloud and closed just at the bottom of the Senku span B. So we're going to look at that. That likely means resistance, which means that AT&T should be going down tomorrow a little bit. But remember, I have the 38 short calls. So I would be quite happy to see the week finish off at 38. We're at 38.14, which means I would keep the premium of those short calls and I would roll again out for another few weeks. Whirlpool had a really suffered, and this may mean that the American consumer is going to get freaked out by the coronavirus and start to save money. But we've roughly fallen out of this channel that had its low back in November, had its high in end of January, has now fallen out of that channel again. These are all opportunities for us to buy into if you've been maintaining some cash. And I don't have the 60 or 70% cash like I used to have. I've got 40% cash. Today I bought another 100 shares of Apple at 302. It closed at 299, but I also sold the 305 calls for I think $3.50. So basically my cost is under 300, so I'm sitting at my cost, and I'm going to have a chance to keep the premium and roll into some future short call trade next week. Tesla, still glad that I sold my puts on it because it's not coming down fast enough to have satisfied me. For me, it would have had to have been well below this 300%. So it was good to get out of that. So where are we going tomorrow? We are due for a bounce because the top of the cloud is going to be attractive. The 50 down here, if we hit the 50 tomorrow on the Chiku span, look at that. That corresponds exactly with the bottom of the cloud. So a swift drop at the open. Let's put an alert here. Let's create an alert that says when price crosses the when the Chiku span crosses the 50, and it's the 50 EMA, we're going to set an alert right there. That's not what I was looking for. Not the price, but I'm going to set it afterwards. But I'm looking for the Chiku span to cross the 50. So really the video's over now. I'm just going to recreate that and do the Chiku span crosses the 50 EMA. There we go. Ah, it's still not right. How strange. So that's a problem that we have with Motive Wave today. So let's just do our alert right here. Let's create an alert for that point. We'll do it manually. And the exact point is going to be right about here tomorrow. So let's look for that, and let's look for a bounce. And when we come back and talk tomorrow, let's see if we actually had that. Now the SMIs for the SPX, and I honestly don't know if the SMIs for the SPX are really valid, because how many people really trade the SPX as opposed to trading the SPY? Or how many people do calls and puts on the SPX, what they call the big cars, as opposed to the SPY? But nonetheless, we see the fast-moving SMI moving downwards. Tomorrow, it could hit the oversold line and move back up. But we've got this long-term stochastic, which is still calling for a downward move, and we haven't seen it turn down since October. So I think we're going to get a bounce tomorrow.